Welcome to Crescat's Market Call, featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing, as well as the fund's performance, can be found on Crescat's YouTube channel or on our website using the QR codes on the slides. The type of investments discussed on these videos can carry significant risks, including risk of loss. The videos are intended to be general discussions of macro investment themes, the mining industry, and news with respect to the companies in our activist metals portfolio, and are not intended to be investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and the discussion in these videos has been prepared with that level of audience sophistication in mind. Any forward-looking statements may or may not come to fruition. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to our head of investor relations, Merrick Iwahashi. His contact information is on the screen now, and it can also be found on our website at crescat.net. All right, welcome everyone. We've got the three of us here today, myself, Tavi, and Quinton, and we will. Quinton, it's been a few weeks, so Quinton has a lot of updates that we're gonna get to. So I'm gonna try to go as fast as I can, and so is Tavi, so we can make sure to get to Quinton. So let's get going. Can you go to the next slide, Trevor? All right. So some of the big news recently has been these private credit events that we've had with First Brands and Tricolor. One's an auto parts company, one's a subprime finance company, and we've had some multi-billion-dollar private credit bankruptcies that when Jamie Dimon was asked about them, he commented that I probably shouldn't say this, but when you see one cockroach, there are probably more. Now, ever since that statement, there's just been a rush of people out there trying to say that these are idiosyncratic events. So, you do your own research. Let's. I think we're going to find out for ourselves whether these are idiosyncratic or not. But I lean more with Jamie Dimon. Let's go on to the next. So, look, I've talked many times, and we've talked about the overvaluation of the record valuations of U.S. equities, of U.S. large cap equities, of the U.S. total stock market index at large, the Buffett indicator. I'm not going to talk about valuation at all today because I think the value argument has already been made, and there's too many people that just say, well, value doesn't matter. It's all about momentum, and it's about well, the earnings are still good with the Mag 7. I mean, never mind that in the internet bubble in 2000, the earnings continued higher in S&P 500 and the large cap tech stocks for the entire year, but the stock market did peak first. So what are some of the other factors that we need to be on the lookout for besides just valuation? Well, one thing is positioning, and this chart is from Goldman Sachs, and it shows that in U.S. equities, investor allocation to equities is at an all-time high. This is the aggregate financial asset allocation across households, mutual funds, pension funds, and foreign investors to U.S. securities, and it is the highest it's ever been. So positioning, overcrowded positioning. Let's go on to the next. Leverage. So Paul Tudor Jones was being interviewed on Bloomberg earlier, maybe it was last week or earlier this week, whenever it was. very recently, and he he said he was asked, is margin debt a problem in the market today? And he said, yeah, margin debt, but it's not so much margin debt, it's the leverage that's embedded in all these ETF products that we need to be concerned about. And look at the number of leveraged ETFs has just hit a record all-time high per this B of A investment strategy research piece here. There's a lot of leverage embedded in ETFs, but also he said options. The options markets are another place to be on the lookout for the embedded leverage. And nowadays we have these zero days till expiration options that are very crowded, and so it's something else to watch out for, because oftentimes these big market bubble peaking type events are a leverage effect, and it's the winding up with the leverage that creates the bubble, and it's the unwinding that's the catalyst, the reflexive catalyst for the bursting. But let's look at something else here, because margin debt in the next slide actually is a concern. We just saw in the prior slide the cash was at record low levels relative to bonds and equities, especially. But it's because people will say, oh, there's still all this cash on the sidelines. Well, no, not when you look at it relative to the amount that's invested in equities. But margin debt is also a problem, because when you have a high rate of change and high acceleration increase in margin debt, this is looking at the 2-year % rate of change, and you can see it, when you've had a high increase, 60, 70% increase over the past 2 years, these are the danger zone. We saw this back in July of 2007. That was an S&P interim peak. We saw it in February 2011. We saw it in February of 2022 during that early 22 market peak. So something to be concerned about. Let's go on to the next. Insider selling. Well, this is not a valuation indicator, but maybe it is. Maybe insiders are saying that things are pretty overvalued, I'm going to sell. And last week we had the top 200 insider trades were all insider sells. When Jensen Huang is aggressively selling in Nvidia stock, do I want to be a buyer? I don't know. Let's go on to the next. This was a great article, I think yesterday or the day before, in the Wall Street Journal that talks about the circularity of all these AI deals. And we've seen this going around on Twitter, but a really good article. I encourage you to read it. It really echoes of the 2000 tech bubble and tech bust, vendor financing circularity that we had. Back then, Lucent was kind of the poster child for vendor financing in the telecom internet boom and bust, and it did not end well. I'm not going to go into depth here. You can read the article for yourself. Let's go on to the next. So Jim Chanos, famous short seller, has been out there recently, talking about the AI bubble, and we've shown charts in the past that compare it to the 2000 internet bubble with the CapEx spending relative to GDP, and the hyperscalers are investing in GPUs and CapEx in these AI processors, largely from NVIDIA, and this is the H100 index for these big NVIDIA's latest greatest processors, and the rental index of these things is down 25% year over year. So this is a record capex binge into a into a depreciating asset. These are depreciating assets. Let's go on to the next. So Mohammed El-Arian retweeted this Torsten Slock from Apollo chart showing. I apologize, it's kind of small, but it's showing that the companies in the Russell 2000 that have negative earnings have been outperforming the companies in the Russell 2000 that have earnings. And Mohammed El-Arian's comment on this is that this can be seen as a broader phenomenon in which some investors are reaching further and further for returns, pushed there by widespread compression in risk premiums. So one thing we hear about this potential AI bubble, and I do think it is absolutely an AI bubble personally, we hear that it's different this time compared to the dot-com bubble because the companies have earnings and the companies still have earnings growth. Well, here's evidence, and the companies had earnings back then too, especially the mega cap tech stocks of their day. And like I said, those earnings continued to grow all through 2000, even though the market peaked before that. Yeah, sure, there were a lot of dot-coms with no earnings, but yes, there's a lot of companies, especially in the technology space, that have no earnings today either. And there's a lot of speculation going on in these names too. Let's go on to the next. So gold has come down a bit recently after a really great run year to date. Is the bull market over? Gold mining stocks have come down. Look at the gold to S&P 500 ratio. We've shown this chart before. Tavi's shown this chart a lot, and in a lot of different ways. But we contend that gold is absolutely not a bubble, and especially gold mining stocks. But just look at the S&P gold to S&P 500 ratio to get a sense of where we're really at there. We haven't seen anything yet. If you think that the bull market in gold, silver, and gold mining stocks is over and has reached a peak, we contend it's quite the opposite. The bubble is in the S&P 500 and the mega cap AI stocks, which are propping it up the most. But it's a broad U.S. equity stock market bubble, as we showed in some of that earlier data, and we believe very strongly in this. The pullback that we've had in gold and gold mining stocks and other metals mining stocks is an opportunity for those who've just been sitting on the sidelines all year to still come in. And let's look at that. Go on to the next. 39% of fund managers, according to the BofA Global Fund Managers Survey, own 0% gold. We just learned that 55% of all financial assets are invested in equities, and predominantly large cap U.S. equities. I mean, that's a record all-time high, but 39% of fund managers own 0% gold. So is gold the bubble? I don't think so. Let's go on to the next. So our funds, our strategies, we have two major themes across the firm. We are long precious metals and other critical metals, mainly through mining, through exploration and development and production stories across the whole Lassonde curve. But we also have a theme, especially that we're expressing in our global macro and long short funds, where we are short what we believe the bubble is in this Nassim Taleb black swan style trade, where we don't have to get the timing perfect. We're trying to get the timing right, but we don't have to get it perfect. It's much more about the setup. and being there with the asymmetric risk reward type play that we have through the put options primarily to the potential downside and from the bursting of these bubbles. And where is the catalyst going to come from? Is it going to be from trade wars and tariffs? Is it going to be from we don't really care where it's going to come from. Is it going to be a private credit event where these cockroaches start to come out of the cracks and crevices? Is it going to be a liquidity driven phenomenon? I mean, it doesn't matter. We can take the opposite side of all this momentum, crazy speculative risk, especially with the low premium, with the low VIX and the S&P 500, and we can roll those options, and we can afford to lose a limited small amount until this event eventually takes place on the downside. So our global macro fund has a negative downside capture ratio. What does that mean? It means on average, our fund in its 20-year history has made money in down markets, and I'm determined to be able to continue to prove that out, especially in this inevitable bursting of these bubbles that we still see coming, and I don't know when, but I do believe it is inevitable, and I do believe it's going to be coming sooner rather than later. So 20-year history are among all discretionary macro funds in the Preqin database. What this slide is showing is that our fund has not only the highest absolute return over that entire 20-year history, which is largely a bull market history, we still have the highest absolute returns. We can make money in bull markets too, but we bring the protection for the down markets where on average our funds have actually made money in down markets. I'm determined to be able to do that again, and we have both the best downside capture and the best absolute returns over that 20-year history. Let's go on to the next. So this is through September. Our funds, among all funds in the Preqin database, as of October 10th, when we ran this, we had 5 of the top 10 performing hedge funds year to date. So our strategy has been working, and we have made money both on our put option portfolio, like we did back in February and April, in our global macro and long short funds. That trade is poised to work again, and we've made money on the long precious metals fund. Now, month to date, October, we are having a pullback. We're having a pullback because look at the GDX, look at the GDXJ. Our heavily tilted portfolio more towards exploration and smaller cap names is actually outperforming, and that's a very encouraging, these larger cap names, because they're, earlier this year, the large cap stocks had been outperforming the juniors. And it's nice to see when this market comes down that the juniors aren't getting slaughtered. Why? Because they're so cheap already. Now, so this opportunity to come in with market at all-time highs, that put option portfolio there and able to be positioned for a correction, and with the long activist metals portfolio, our largest theme across all our funds, our precious metals and institutional commodity funds are virtually solely dedicated to that theme. I think this time for investors who've been sitting on the sidelines to take advantage. And there are a lot of investors, as that survey showed, that are still sitting on the sidelines when it comes to gold. Yeah, you've been missing out, but this is your chance to come in on a pullback. No guarantee it won't pull back a little bit further, but I think there is so much more upside ahead. I'm going to turn it over now to Tavi to continue the macro presentation.
All right. Thanks, Kevin. Let's get started. Look, I'm going to talk a little bit before we go through here very quickly about what's been happening recently with Newmont, and it's not an interpretation of what's happening with Newmont specifically, but rather through the whole industry. Newmont has reported earnings yesterday, very good earnings, right? I mean, it was more than 20% above the EPS estimates by analysts was about 110 or 111% relative to the prior quarter, to the quarter, same quarter from last year. So very, very good bottom line results. And the conventional view looking at this has been, how in the world is this stock down with earnings improving, right? I mean, that's been the kind of consensus view on this whole situation. Well, let's take, I think it requires a little deeper look into this because it does have a very important message for the overall industry. This disappointment came especially because of production guidance, which was guided to be exactly or very much the same as the guidance of this year for the next year, right? So there's pretty much no growth of production. All right, so this is how I see it. Maybe we can take Kevin or Quinton's views on this as well later. The way I see it is that the market is now starting to realize that these companies are starting to run into growth constraints, right? I mean, we know that these large mining companies have been, for the most part, depleting their reserves, not investing in exploration. Their exploration budgets have been extremely low relative to history, and doing very little to acquire new deposits that could come online anytime soon. So what happens next, in my view? This is one of the first times in this cycle that we're seeing the market, investors, demanding growth, right? I mean, I've seen Newmont, I've seen Barrick, all these guys saying, we're not focused on volume, but the market is saying, we want you to be focused on volume. We want you to grow. How do you get to growth if you are one of those major companies? Well, the easiest way, you can spend more on exploration. We've seen some acquisitions among the major companies. That's extremely hard. If you're into, doing acquisitions and all these things, acquiring another major company is if you want to explode your head of complexity, that's what you do, right? That's extremely complex and difficult. We've seen a lot of those happen recently here, right? Major companies merging with other major companies or mid-tier companies. We've seen that most of it already. The way to do it, and we know exploration is extremely hard, right? I mean, how many companies out there today? There's, multiple companies, thousands of companies in the mining industry, and only about, 5 to 10% of those companies actually hold high quality assets, particularly in the exploration phase. And so exploration is risky, it's hard, it's rewarding on the other hand, when you get it right. And I think that this is a pivotal moment for the earlier stage companies, because these companies, the major companies, are going to be under pressure to grow. And I view as the simplest way to grow, acquiring small companies, acquiring stakes, either equity stakes in these companies or outright trying to acquire their assets. So if you are, I think, my 2 cents, buckle up for what I think it's going to be a major M&A cycle. Again, just to reiterate, not among the major miners themselves, but really across major companies looking to acquire the smaller companies. Again, this is just my view. And this is how a mining cycle tends to unfold. The capital flows into the major companies first, and then it starts to flow down into the smaller names. So welcome, in my view, to a mining cycle, a classic mining cycle. Game on. That's my 2 cents. All right, let's go to the next chart. Gold to silver ratio. Now, we're talking or sending emails back and forth with Jim Wise, who works at the San Cristobal mining company. And, he reminded me of a very long-term chart looking back of the gold to silver ratio. I wanted to give more statistical evidence of where we are historically speaking. The historical average of this ratio going back to the 1600s, right? So there's a lot of data here. 1600s was about 29.17, so about 30 on the ratio. Today we're sitting at around 85 or so, depending on the second that you look at. The second or the 2 standard deviations away from or above from the historical average would be about 50.6. And today we're about 2.58 standard deviations above the historical mean. Okay, historically, what we tend to see is that, back in the early 1900s, we did see that ratio at around, for about 3 years above this 2.58 level that we are today. And if you can look at this as well, we did see back in 1970s, this ratio go above the same level for about 2 years. So 3 years first, 2 years. And if we exclude that briefly moment that we saw, maybe we should subtract, and not say it's 5 years, but we should subtract that moment that we saw briefly in the last 5 years that went below that. We've been essentially above this 258 standard deviations above the mean for about 5 years. And I think we're getting ready to break that level in a very large way as we see a cycle unfolding. I've never seen, I think the big question for investors, when you look at what the damage we saw daily on the sell-off is, there's three things you need to think about, right? Is this the end of a cycle? Are we going to be going through a consolidation period? Or three, this is not the end of a cycle, and this resumes to what we've seen in the last 12 months. I think it's easier to approach these types of questions or these types of possibilities in markets by trying to eliminate at least one of them. And I would, in my view, attempt to eliminate the fact that we're probably not in a peak of the gold cycle, as Kevin was presenting as well. I've never seen the peak of the gold cycle happen with the gold to silver ratio at 85 or so, right? Usually in 2011, actually, we saw go down to 30. If we go back to the 70s or so, we saw that, or back in the 80s, actually, we did see that ratio go down all the way to 20 or so. This time, given the level of extreme imbalances we have worldwide, would not surprise me at all to see even worse than that. So I think this is extremely bullish to the whole, mining cycle, to the precious metal cycle, to the potential of a long-term bull market here. I'm very excited. I think this is not the time to be panicking and saying this is the peak. I think this is the time to be looking at deploying capital. My 2 cents. Let's go to the next chart. Three things happened recently with Scott Bessent. He made a few comments that I thought was remarkable. One, he said that there has been a lot of, and by the way, I have huge respect for Scott Bessent. I think he's one of the smartest macro brains in the world today. And I think it's, I'm not a US citizen, but I think it's a pleasure to have him as a Treasury Secretary of the US administration, personally. It's not a political view. It's a view about how smart this guy really is. And I think some of his comments recently are really interesting. First, you can see Bessent on surge in gold prices, more buyers than sellers. And then he said, gold prices are rising. Gold prices rising has helped the US substantially. Well, US reserves, assuming those reserves are real, it's sitting at about $1 trillion at current gold prices, or about 4,000. I want you to think about something just quickly. If you were thinking about, there was a whole discussion about revaluing gold at the beginning of the year, and Bessent was asked that question, would you revalue gold and so forth? And he said, no, I'm not thinking about that. Logically and rationally, that actually makes sense. Why would you just revalue gold prices when you can actually acquire that in the market and drive prices higher and accumulate more of the metal? I think rationally, that makes a ton of sense. What I disagree with Bessent, and I understand he's trying to do his job, is on the left. I know it's a small here, but you can read it on Twitter if you want to go to his page and look into that, where he's saying that the deficit is actually shrinking dramatically. I agree with the views of folks like Luke Roman that have been saying that this is an accounting gimmick that is really causing the deficits to fall. What is the real measurement of improvement on that front? Let's go to the next chart. Sorry, this is not a chart of gold. It's actually a chart of the federal debt outstanding, just to clarify. But this would show us that deficits have been reducing, and we're not seeing an exponential growth of federal debt outstanding. Now, somebody, Hugh Hendry, which I also have respect on the macro side, made a comment that unfortunately I disagree. And first he said that today's dollar, so monetary base is sitting at about $5 trillion today. Monetary base, right? That's your first level of money in the system, and money circulating in the system, dollars. We have about, I just said, $1 trillion supposedly, assuming those reserves are right and Fort Knox and so forth, $1 trillion sitting at the U.S. government today of gold. So he said for every $1 or $5 of monetary base, you have $1 worth of gold. So it's backed by gold for a 5-to-1. What I think it's interesting about that is actually if you do the total debt that we have in the federal outstanding, just do the math right now, it's sitting at around $38 trillion with $1 trillion. So that ratio is actually 38-to-1. I think that's the real ratio. And his reply was, well, you should be logging the federal debt outstanding. You know why you do that? You do that to show that that growth is maybe not as exponential as it looks, because it smooths out the growth factor of any chart. Let's go to the next one. Well, I logged it. Let's go log the federal debt. Are you seeing a base there? I'm not seeing a base. I'm not seeing it is stopping growth at all. And I see a linear, basically, growth of the debt. I'm not seeing a deceleration. In fact, in the last 12 months, the federal debt is growing at around 9% year over year. Right. So take your investment. By the way, interestingly enough, I think Ronnie Sterfele made that point as well. Since the 1970s, gold has compounded about 9% growth annually. I guess that's in line with debt growth as well. If the chart is linear, and we've seen about actually historically as well, 9% growth on the federal debt outstanding. And this year has been in line with that. So no, we're not seeing deceleration. We're not seeing decline. We're actually seeing this, in line with what we usually see. We could see a lot more, as the government shutdowns potentially ends and maybe opens up even more spending on that front. This could get very interesting. So no, I don't think we're seeing any improvements on deficits. Wake me up when we see that. And I think that the thesis remains very compelling for hard assets and precious metals, in my view. Let's go to the next chart. Next chart, we're looking at another way to calculate this. Is just looking at U.S. gold reserves. And this is the way I should have approached the idea about Hugh Hendry, right? Instead of doing the 38-to-1 ratio of U.S. debt outstanding relative to gold reserves, we can just say how much of U.S. debt is backed by gold. It's about 2%. 2% back in the 1970s was about 17%. And I know people have changed the narrative, and I love when people do that. Like right now, you talk to somebody about what is the U.S. Treasury backed by? They say, oh, it's military. It's the military strength of the U.S. economy. Honestly, I don't believe in that. Back in the days, decades ago, I wasn't even alive. The whole point about owning treasuries is because it was backed by gold, right? And in a substantial way. That's the whole point of owning treasuries. And then as we enter a very undisciplinary world, folks have started to change that and justify by these, in my view, kind of stupid ideas of it's backed by military support. I don't believe in that at all. If we go back to levels that we used to be backed by in the 70s or 80s at 17%, implies some crazy gold prices. And I'm not here to imply that at all. I'm just saying, as an investor, you're always trying to think about what's the intrinsic value of an asset. This is a good way, in my view, to sort of think of that way. And if you want to go back to the World War II environment where the U.S. government, a little bit before that, debt growth that we saw to finance the war, and the debt used to be about 40% backed by gold. I don't think we even want to talk about the numbers at gold prices. I know it's in the chart, and you're welcome to see what the number is. But those are the targets at the time at an implied of 40% of gold reserves backing the current U.S. debt outstanding that we have. Anyways, let's go to the next chart. Next chart is showing, yes, central banks have been divesting in some cases of U.S. debt recently. But if you think about it, and I know it's not a net selling, so I don't want to be framed as that way at all. But the biggest actually, contributor to the fact that we're not seeing net new demand for treasuries in a big way, that's actually been the Fed, right? The Fed has been doing QT, letting QT is just a quantitative tightening, which is just letting its treasuries mature rather than rolling them over. And the decline of the balance sheet of holdings has been about $1.5 trillion all the way to back to 2022. So, I think that the fact that they're considering stopping QT, this could be a change especially of how we may see even maybe the reversal of that trend. We all know that the U.S. government cannot sustain these levels of interest payments to GDP. And one way to start that is reversal potential to at some point start acquiring treasuries rather than allowing them to mature and reduce the ownership of treasuries in the Fed's balance sheet, is to actually stop QT. And so, I think this is constructive from that standpoint. And it's the first step before we get into QE type of policies, in my view. Let's go to the next chart. The history of gold cycles. I think this chart is still, to me, one of my favorite charts, just because it gives a good perspective. First of all, if you average the last two returns that we saw in the first cycle and in the second cycle, first cycle from 1967 to 1980, in this case, the return was about 2,330% of gold in total return. Back in the early 2000s, all the way to 2011, 2001 to 2011, we saw a increase of about 640%. Now, let's use our hats here. The whole point of this chart is to see the listed amount of arguments to why we're seeing a cycle and why we saw a cycle in the past. And the number of that list, as you can see here, of items in that list are substantially bigger today. And I didn't do that on purpose of trying to not add other bullet points. I do think that the bullet points today that are driving gold prices are substantially higher than what we saw back then. We're seeing deglobalization. We're seeing onshoring across most G7 economies, trying to revitalize their manufacturing plants. We're seeing the valuation problem Kevin was referring, potential for inflows into the gold space out of the equity markets. We're seeing unsustainably high fiscal deficits. We didn't see that in the first cycle. We are seeing debt levels that we haven't seen in any of these two cycles. We are seeing a lack of gold discoveries. We are, in my view, in an inflationary era again. Look, and just to mention one thing that I think is even more important, the trifecta of macro imbalances. This is one way to simplify our views where we're seeing the debt problem of the 1940s, the inflation of the 1970s, and also the asset valuation of the late 1920s and 1990s. All right, well, let's go to the next chart here. I think Kevin mentioned a little bit about the gold, the S&P 500 of gold. I think he was looking at the other way around. I find that very interesting just because, we've been looking at this spike in gold prices over the last 12 or surging gold price over the last 12 or 24 months. And to put into perspective of financial assets, right, this rotation potentially between financial assets into hard assets, let's look at where we are. And today, S&P 500 in gold terms, so just dividing the S&P 500 index by the gold prices, well, we're sitting exactly where we are back in the peak of 1929. Now, I'm not here to say we're going to see a depression like we saw back then. I think there's a possibility of that, certainly given valuations. You have to be open-minded to that. But I think more importantly, it gives you some also a better understanding potentially of that gold is not in a peak at the peak of the cycle, and most likely more in the middle of a major long-term cycle that we are experiencing. Let's go to the next chart. Next chart, I'm looking at that value or that change on an annual performance. So year to date, from January 1st to October 20th, I calculated this change of the S&P 500 in gold terms. It's almost like, the last time we've seen something like this was actually in 2008, when the market was down about 30%. And today, given the fact that gold has been really outperforming the S&P 500, entirely driven by gold, not by S&P 500 declining, right? But it's fascinating that we are the comparison today of the S&P 500 in gold terms is that we are in the middle of a deep recession. It's like your money is evaporating. It's hard. Even if your money is in S&P 500, you're being debased by the fact that there's real inflation, right? I mean, some other macro guy said in a good way, you can't just look at inflation. Inflation is one factor. Let's say inflation is running at 3 to 5%. What has been the debasement of currencies on top of that? I think it's running probably at a 10% rate right now or more. So you add that to those, that's about a 15% total inflation in the system right now. It's hard to catch up. Sometimes I see our own portfolio and I'm like, I'm not sure if I'm happy, obviously, but am I happy or am I, it's a weird feeling because at the same time, I know that the dollars are just, evaporating in value. And it's not just the US dollar, it's all fiat currencies. It's a weird world we're living. I'll tell you that. So anyways, let's go to the next chart. You can also look at the silver to gold to S&P 500 ratio as well, which in my view is a really important, remarkable way to see how silver is undervalued still relative to US equities. I often hear silver might be hitting a top because it's hitting a triple top. Have we not learned that triple tops often don't work? Why anybody would be calling for a triple top? I don't understand it. Some people are usually could be a little bit stubborn, but I'm not going to get into that. My view is triple tops don't usually work, especially when you have a major cup and handle, historical cup and handle like we have in silver. And I think a chart like this, looking at a double bottom in this case, double bottoms and double tops do work, by the way. That's I would not mess with charts that look like that, especially from a long-term standpoint. And so what you're seeing here, which is also being calculated using total returns for the S&P 500, is to me a fascinating chart, most likely the beginning of a rotation out of financial assets into hard assets. All right, let's go to the next chart. All right, one thing that's been happening, gold miners have been tripling, quadrupling. Of course, depends on what mining company you're talking about. Some of them just double. It really depends. I'm talking about over the last years and depends on the time frame. I'm talking generally, mining companies have done very well. If you look at the index, the Philadelphia Stock Exchange Gold and Silver Index, it's up about 2.5x since 2023. But what's fascinating is that the valuation of these companies are actually compressed because the fundamentals of these businesses have improved substantially. In fact, in my calculation of looking at the aggregate free cash flow of per share of the mining companies, what you saw in the last 2 years is actually a free cash flow growth of about 11 times, okay, compared to a 2.5 times of the share price. So that gives you some idea, in my view, of how valuations can really play in your favor when the share price increase is being driven by major improvements in fundamentals. I think this is precisely what's going on here. Let's go to the next chart. Another way to look at the gold miners is also comparing to money supply. We're just starting to see gold miners outperform money supply. I think it's a fascinating chart as well. This is, in my view, a very significant and meaningful and breakout over decades. And I think it's marking the beginning of a trend that potentially gold miners could really not only outperform money supply, but also serve as leverage. Again, leverage works in a good way and a bad way, but leverage if we are in a gold cycle that we're potentially in a very positive environment for metal prices. Let's go to the next chart. The next chart, I'm just going to comment a little bit on oil. I think there's a very kind of an implied potential bottom from oil prices, given that the government is now thinking about increasing their strategic petroleum reserves. This was, the news from the Department of Energy. I find it interesting because oil is in a very tricky situation. It's been from a positioning standpoint on the CFTC, non-commercial positioning is one of the most bearish positions we've seen in history. So people are overly bearish, which tends to be a positive thing for assets, the so-called short squeeze. Number two, we're also seeing on the production front in the U.S., number of drills in basins like the Permian declining about 30%, over 30% in the last 2 years. All right, some people that like to be smart butts, they usually like to say there's efficiency happening. All right, no efficiency drives 30% of decline in drill rigs. You can talk to most geologists, nobody believes in that in that near term. Okay, it could happen over a long period of time, but that type of near term efficiency improvement is completely absurd in my view. And a third, we're seeing sanctions. The geopolitical problems are not priced in oil in oil prices today, in my opinion. And lastly, if you look at the gold to oil ratio, it's in an extreme. And usually people try to justify with all these reasons of why these ratios get to extremes and this unreasonable ways of justifying something. And that's where I get really skeptical about those things. Like, if you have hundreds of years of history that gold to silver ratio do not tend to be at these extreme levels, why would you fight against that trend? Now, why would you even come up with okay, we can all tend to come up with, but there's not, I can't find a plausible reason to really support the thesis that the gold to oil ratio should be at these levels for the long haul. And I've been saying this very openly. I think that energy companies look cheap, and fundamentally speaking, and I think it's an incredible way to diversify as well, a portfolio as well. But that's just my opinion. Let's go to the next chart. You can also see this divergence that I think is interesting between commodity producers. It's a MSCI Commodity Producers Index that actually is heavily tilted over energy. So over 30% of this index is energy. And then the blue line is looking at oil prices. Well, that divergence does not stay that way for a very long time. So at some point, I think that the blue line is going to start following what the white line has been doing. And so, I would not be wanting to have a negative view on the blue line here. You may justify a negative view on the white line, sure. But on the blue line, not my view. And by the way, by no means I have the view that the white line or commodity producers are in a negative environment. I think we're in a natural rotational dynamic of the commodity space, and wouldn't shock me at all if energy, after consolidating for over 2 years, it starts to gain some momentum here. Let's go to the next chart. All right, this is an important chart. We're going to dive into now markets in the US very quickly. I'll go quick. But when the dollar turns, the world turns. That's the title of the chart. The white line you're looking at is the relative performance of US markets versus emerging markets. Now, I've said here a few times that I love emerging markets. I think emerging markets are in a very important or pivotal moment as well in history, potentially about to become very beneficial for those economies. There's two things that really help a company or an investment in the equity world is low PE ratio married with or combined with growth, right? Double-digit growth and so forth. We know these economies have very strong correlation with commodities. We're seeing metals, especially metals, actually have a very strong correlation with Latin America and other emerging markets because some of these countries are some of the largest exporters of those commodities in the world, energy and other things. And so as you see these things being benefited by this macro environment, I suspect that is going to generate growth, and growth, again, combined with extremely low multiples, could be a very explosive combination on the upside, in my view. So pay attention to the whole idea of this chart is to show that the dollar has been rolling over. Yes, I know that the dollar has been digesting a big movement recently. Not my view that this is going to stay here. I think the dollar is going to break much lower, enter a multi-year decline. That's just my 2 cents. And as we see that occurring, we're going to see a rotation, in my view, out of the U.S. equity market into emerging markets. All right, let's go to the next chart. Let's talk about U.S. markets quickly. Transports. That's one way to look at leading indicators in the market. Transports tend to be a leading indicator because it's obviously involved with logistics. It's a great way to gauge economic activity. If you're not seeing the transports leading the way to the upside, raise your eyebrows and start thinking about, well, there's something weird going on here. Tactically, I mean, we can all talk about structurally how equity markets look expensive. I'll be the first one to admit that as well. And I think Kevin will as well, of course. But I think that the red line here looks scary. I think this divergence is what I call an alligator mouth that, usually doesn't end well. We've seen this. This chart is going back to 2020. 2018, we timed that period very well using this, what is called the Dow theory. Is when the transport are making new lows, and the Dow Jones, which is not a great measurement of the overall market nowadays, but it's a great way to see how that divergence tends to actually time the market very well. And so it's a good timing sort of index. Doesn't mean it's going to be right, but it's one of those that you add to your toolkit when you're trying to tactically understand what could happen in the market. So market looks frothy, tactically speaking. We know that structurally as well, but tactically as well. Let's go to the next chart. Next chart is looking at the breadth weakening. So you look at percentage of companies above the 50-day moving average. That has also been weakening as the S&P 500 continues to make new highs. So there's less participation of companies, if you in terms of pushing the index higher. It's scary when you start seeing those things. And actually, if you look at the Russell 2000, the same measurement is even worse. But we all know that what drives the U.S. economy is consumer, right? Consumer spending is a big part of the U.S. economy overall. So if you go to the next chart, where you're looking at is that consumer discretionary alone, that divergence is looking even more scary in terms of only 20% of consumer discretionary companies are above their 50-day moving average. And the index, separated that sector of the economy, still is at basically a double top, as you can see in this chart as well, which, as I said before, double tops and double bottoms, I respect those trends a lot. I do think those things are real. Let's go to the next chart. It's just a look up. We know CAPE ratios, the cyclically adjusted PE ratio looks, very high. But this is another way to look at just simply looking at PE ratio today. We're at the same level we were back in the tech bubble. We're below the 2021 bubble environment. Do you know what a person does that is just, you can't help it, like in terms of risk and risk reward analysis? Those types of people, they look at these chart and what they say is, well, we haven't hit the 2021 bubble yet. So I don't know. Good luck with that. I like to just move on and focus on things that are more attractive from a fundamental standpoint. And there's plenty of things out there. Let's go to the next chart. Another way to think about it, I think Kevin was talking about Jim Chanos. Jim Chanos is a famous short seller in the market. He came up with this measurement that I've been looking at very closely. It's called the Michael Saylor to Bitcoin premium ratio. It's basically looking at the Michael Saylor MicroStrategy company share price relative to Bitcoin price, and given the fact that the stock is supposed to it's a what they call a treasury company, where people that buy MSTR are usually looking to get exposure to Bitcoin in a leverage way. in a levered way. And so what you tend to see is when that ratio is declining, so people are usually buying Bitcoin rather than MSTR, it simply means that they're trying to reduce risk in their portfolio. So it's a great way to actually, and it's fascinating that it follows S&P 500. And now recently we're seeing a big divergence between the two. So, it's something to be aware of as well. Let's go to the next chart. Next chart. Can we go to the next chart, please? Okay. Oh, nope. Do we have a next chart? Oh, I think we're done. Sorry. Quinton, take it away. Great news. Sorry.
I can make another chart, Tavi. It's okay.
Trevor.
Oh.
No. I'm done.
Here's my chart. Now the geologist gets it done. Yeah. So I'm sure everybody noticed the dip in gold price. I was moving up and up and up really fast there, and then all of a sudden, whack! Oh my gosh, it's terrifying to see. Well, it's terrifying to see everything go vertical, but then it's also terrifying. It's like, oh my gosh, it's falling precipitously. I think it fell over 5% or something. But I figured out why, guys. I figured out why. You know why? It's because I had a dentist appointment. Everybody knew my crown was coming out. My tooth cracked, and they had to take out this massive crown right here in the back. It still hurts like a dickens. That caused shorting in the gold space. Yeah, everybody knew that tooth was coming on the market, and it knocked the price of gold down 5%. I kid you not. It's unbelievable. Anyway, we'll carry on from here. It's 4,100. Who can complain? Okay. Before we hold on. Don't go to the next slide yet, or I'm not done with the. Okay. One of the gauges I use in the junior space, I don't like the term junior. We'll say the microcap mining space is the money that's coming into the space. Okay, like, are there brain cells behind it or not? Okay, usually when you're at a top in the microcap space or the mining space in general, you got a lot of dumb money coming in. The generalists start to pour in money by just by bucket loads and stuff, and you don't see that yet. You really don't see that here. Okay, so it kind of tells me we're still in the early innings. Maybe we're at the bottom of the third, I don't know, top of the fourth, I don't know, somewhere in there. But we're certainly not in a position where we're seeing a lot of the dumb money coming in. I remember I think Tavi had an exchange with somebody this week, and I caught wind of it, and he said, well, when Jim Cramer's shouting that it's a buy, that's usually a top. Yeah, I don't hear Jim Cramer shouting anything in the mining space is a buy right now. So we're clearly not at the top. But I would say I take great comfort in the fact that there isn't a lot of dumb money showing up. In fact, there's still a pretty good opportunity to deploy smart money, and I would like to consider ourselves part of that. One of the reasons I haven't been in the live videos here lately is I've been traveling an absolutely stupid amount here recently. One of the trips I made was actually to London last week. It was to the London Metal Exchange, the LME week, as they call it. And while at LME week, I got to do a lot of different things. I mean, there was the meetings associated with the event itself, but then there were other meetings I made. One of them is actually the ICMM council meeting, which they hold quarterly. And I took Sumitomo's position once we bought St. Cristobal from them. And I got to say, there were some profound changes that I noticed. Walking in that room, I noticed the absence of about maybe 7 or 8 prominent CEOs. These are CEOs of mining companies, or they were, I should say, CEOs of mining companies up until recently. And there has been a departure of many CEOs. Okay, you've seen Barrick. Their CEO's gone. Newmont, that CEO is on his way out, probably in the next couple of months. I think I can't remember the exact date, but soon. BHP, Rio Tinto. The list goes on. There's quite a few. I find it very, very interesting. Here we are in a space where commodity prices have risen, and yet we're seeing kind of a wholesale departure of the old guard in many of these mining companies. That does have a profound effect on mining companies' ability, or I should say, long-term vision. Okay, that's probably the best way to put it. Think about it. If you're in the process of changing out CEOs, it's probably not going to be a juncture during which you're going to go into M&A phase or something like this. You need to reestablish who the next management's going to be and stuff like that. So this year, I don't know exactly why. I asked a few friends of mine. I said, what do you think? Is it because they all want to exercise their options and get out while the getting's good, or what's going on? I got different answers. Most of them said, most of these guys are kind of at retirement age, and they're all more or less, acting in unison here as they hit retirement. I don't know what the reason is, but it is a profound change in the mining industry, and I think people need to be cognizant of it, because I think it's going to take a little bit of time to kind of reset the vision in a lot of these companies, and that will have impact on the ultimate growth trajectory, the M&A trajectory and stuff like this. So it might require a little patience. That's all I'm saying. But does it mean commodities are more and more abundant? No, we're dealing with a diminishing stock of good assets. So we haven't seen mines being built lately. All the tenets of our thesis remain intact, that we are in a commodity bull, this being one of them. Okay, let's carry on. We're going to rip the Band-Aid off. Go to the first slide, or next slide. Rackla, what a shocker. Holy smokes. I'm just truly at a loss for words to explain exactly what's happened here. The company reported last year, this is fall of last year, roughly this time, they had talus samples along the bottom of the cliff there that showed continuous gold mineralization and pretty robust gold mineralization. And then sometime late last year, they also had a channel sample come back where they had actually done hard rock sampling on the hard rock, the face of the rock. And they got a pretty long, like a few tens of meters of 1 point something gram per ton. In every respect, this looked like all systems go. The drilling, as you can see here, they presented the density of veining that they've seen in the drill holes. Again, usually when you see veining like this in a reduced intrusive system, it bodes well. Now, looking back when they started drilling, looking back at this deposit, or this, I should say, this prospect, there were some curious things. Like when I visited there in mid-July, saw lots of bismuth veins, like lots of little tiny veinlets with gray stuff, but couldn't see much visible gold. Okay, that set it apart from Snowline and others. Yet the guys had samples that they collected at surface, either spot samples or channel samples, and I could look at those rocks and say, those rocks also had these little gray veins in them, and they have gold. Okay, so why the drilling, the first three holes haven't generated the results to kind of back up or support the surface samples is a bit of a head scratch. Okay, but it is what it is. Did they hit no gold? No, they hit some gold. Okay, you can see over here on the right hand side, I won't read through them all, but you can see there's short intervals in virtually every hole they had. They have short intervals of gold. In some cases, gram plus, which isn't as significant. It's just not big, long intervals. Okay. Did they have bismuth and tellurium also? Yes. Look at the two right-hand columns there. They had big bismuth numbers, and that's not a surprise given the amount of bismuth minerals that are evident, like visible in these veins. In fact, even beyond the veining or the assays that are reported here, there was bismuth in many, many veins. So like this is a world record for bismuth in my book. It's crazy how much there is, but there's not the gold, necessarily continuous gold. Now, is it a complete bust? Well, look, they have a few holes in here, and this is kind of like looking at a plate of spaghetti when you're looking straight out on it. But for example, there's hole 10 where you see a big stretch of dark red. That means high vein densities. And, could we see something that's a surprise out of here? I don't know. I hope so. Look, I guess my view is I'm holding my shares until I see what all the assays are, but I'm now of the view I just can't even begin to predict what might be coming from the subsequent holes that have yet to come back. Win some, lose some, but this is a real heartbreaker. It truly isn't. I'm disappointed, but you got to kind of pick up the pieces and move on. Now, the company did put out another news release. Go to the next slide, talking about some new targets. Now, I realize folks are probably a bit jaded here based on the drill results from the BITE prospect that we just talked about. So, some of these targets, maybe they deliver. I don't know. There's this Manta, Calypso, and Ogre targets. These are all targets that they prospected that are all in this general neck of the woods as the bite target. These are different intrusions. These are different reduced intrusions that are nearby and on Rackla's ground. In each case, you can see they have some form of data, whether it's soils or talus, I should say, sampling or something, maybe a few rock chips that show there is gold mineralization in each one of these. Is it, are any of these a slam dunk in light of what we've seen at Bite? Well, no, it's tough to say that, okay, because each one of these could hold the same sucker punch, I guess, of not failure to deliver. But it is what it is, guys. I wish I had better news for folks. I guess what I would say is the one really strong thing that Rackla has is a strong treasury. Okay, I think they have $10 million Canadian or something like that. So it will allow them to get out and test these things, or if they do have some good results out of the remaining holes at Bite, maybe we see them follow up with some more drilling next year. But again, it is what it is. Don't know what to say. Let's go to the next slide. Okay, now let's talk about the kind of the absolute opposite in terms of meeting expectations. This one meets expectations. Sitka. Okay, Sitka has been drilling at Roscobble for quite some time. I mean, when I was there, which was early to mid-July, I think, they had a couple of rigs up there, and they were just pounding out holes. They were drilling holes successfully in a big, long line. And they put out news subsequent, as they drilled these holes, they talked about seeing visible gold and stuff. And now we're starting to see some of the assays come through. And you can see there's just phenomenal results here. We got 235.9 meters or 1.1 grams. And within that, there's some higher grades there. You can see the subintervals. But even another hole, there's 118 meters or 1.09 grams. Okay, this cross section just illustrates what they hit. There are sub units or subsections within that are higher grade, but overall, this is a phenomenal result. It's great, well behaved, reduced intrusive system. Quite frankly, it's open. It's probably open at depth. It's open. Like, think about this drill hole. If you drilled over to the left there, which is to the west, I think you might hit a lot more. Okay, so this is a new target that's now delivering. Roscobble looks like an absolute beast, and you can see that in the next slide. Go to the next slide. You can see the plan view of all the drill holes here. Now, a lot of these holes don't have assays yet. Okay, so we're going to see a long, steady stream of news out of this company, and I do think they're trying to tell us that we should expect good things, because if you look at many of these holes, which they're scattered over nearly 2 kilometers here, guys, that's crazy. Okay, but if you look at many of these holes, the little gold stars are visible gold that they've observed. So I would expect to see more long strings, perhaps 100 plus, 100, 200, 300 meter intervals of decent grades. And it's open too. Now it kind of looks like it's petering out to the northwest there. There's only a couple spots of VG, but bear in mind, the thing might actually take off a little bit more northerly or something. So I wouldn't totally write that off. But to the east there, and this is dated, I mean, this is like September or something, I think. So anyway, to the east there, southeast, it's wide open. Okay, so you already have something 2 kilometers long and probably, a couple hundred meters wide, and it certainly goes down 200 or 300 meters. That's a lot of volume. This looks like a major discovery, and it's just one of many. Bear in mind, they have multiple targets they've tested this year. They've talked over and over about CNVG and stuff. Assays are a little slow, okay, because we're back in the unfortunately, we're seeing the same phenomena we saw a couple of years ago where the labs are completely jammed up because everybody's raised money and they're out drilling and it's just taken forever. But that's part of life, but lots of good stuff to look forward to. Next slide. Okay. This news release, which came out September 24th, is out of Snowline, and it's actually talking not about Valley. Okay, this is talking about the Jupiter target, which is, it's well to the north of Valley. This is up in the Einerson project. They actually defined two projects. So Rogue hosts the Valley target. This one is in Einerson, which is to the north. And one thing I will say is I really like Scott. Scott seems to have the Midas touch. I got to say, he kind of thinks through things, and he shows a unique ability to test, especially at the early exploration stage, test things in a meaningful way such that you can demonstrate scale. Okay, and in this case, he's drilled some holes. He's done some big steps, but he's seeing gold sprinkled way out. Like now we're looking at a system 2 kilometers long already. And yeah, these are just one-off holes. They're very widely spaced. I mean, they're hundreds of meters between these things. But the fact that he's hit the same style of mineralization again and again and again, do you think there might be a big gold system here? Yeah, look, I think the odds are if you're seeing a handful of holes, routinely hit good high-level orogenic system, gold. This is epizonal gold mineralization. That's a good sign, okay? In my book, this is a very good sign. Here we are right in the middle of reduced intrusive country, okay? And we have, lo and behold, a high-level orogenic gold system right in the midst of this too, which I find really intriguing. But kudos to him. But guess what? The second part of this news release, I found even more interesting. Go to the next slide. Same news release, okay? He talks about, or the company, I should say, talks about some drilling that they've been doing at Valley, or I should say east of Valley. Valley deposit, you can see, is well defined now. You can see all the drill holes over there, beautiful cohesive blob of higher grade mineralization with a nice big halo. Yeah, they got some drill holes that they've drilled, particularly to the northeast. You remember last year, there was a hole out there. I can't remember. I think it was 115 or something. And they wanted to step out in that direction. So there's clearly something trying to reach out to the northeast. Some of those holes that you see in the northeast have the little gold stars. Means we probably should expect some assays back from that maybe soon that tell us there's expansion there. But over here on the east side of the intrusion, so on the east side of this big pink blob, you can see they've now defined a zone about 500 meters long where they're seeing drill holes that quite frankly look like they're straight out of Valley. Okay, so is there something as big as Valley? I don't know yet. Do they know? Not really. They got enough holes in here to tell us if there's a new deposit over there. Could there be, a sizable inventory of gold? Perhaps, I mean, that footprint there could easily host 2 or 3 million ounces. Okay, so I think that's a significant discovery. I'm very anxious to see what the assays tell us. Don't know yet. We got to wait for those. But it looks interesting. Is this system done yet? No, it's not. That tells us right there. There's more to expect from this deposit. Let's go to the next slide. Okay, Altamira put out an absolute flood of news over the past few weeks while I haven't been live, I'll say. And I want to touch on some of these. I can't just take 20 minutes to talk Altamira. I probably should at some point. But I want to point out some very important things about Altamira's news. Now, first of all, the one in the upper left there, they received an environmental permit for 2 trial mining licenses within the central mineral resource area at Cajueiro. Okay, the historic resource, I shouldn't even say historic. The company drilled the central mineral area years ago, and they have a resource, I think like 600,000 or 700,000 ounces, somewhere in that range. It's open pittable, or it looks like it's open pittable, and they have permits now for that. That's amazing. Okay, they can go ahead and go to trial mining if they wish. That's remarkable because I've seen how long it can take sometimes to get a permit in Brazil, and this was very efficient. So kudos to them. Okay, kudos to them. This is, it has a component of development story that can now be told to the market as well as their exploration upside. That's a positive. All right, now over here on the upper right, we have mention of intersecting. So they are drilling. They're doing a lot of drilling right now. They intersected porphyritic and trisa rocks in the initial drill holes at 2 of the targets. These are 2 targets at Cajueiro. They're kind of up in the north, and I will talk about those briefly. And then down there at the bottom, the headline is they hit 395.5 meters, a 0.4 gram per ton in the first drill hole at Maria Bonita, the first deep drill hole at Maria Bonita. Okay, this is, people say, 0.4 grams, that's kind of low. Well, hold on a minute. This is exploration. Okay, first of all, did they hit the guts of the thing? We don't know. My gut says no. But when you start to see 400 meters of mineralized rock, that's a huge volume. Okay, that's an absolutely enormous volume of rock that they've intersected that has gold mineralization. And 0.4 gram, by the way, is about $50 US in gold per ton. And are there any mines in Brazil that operate at this kind of grade? Absolutely. Paracatu, one of Kinross's biggest mines and most profitable mines, quite frankly, is milling gold ores at sub 0.4 grams. Okay, I kid you not. Huge tonnage operation, but it's a great mine. It's making lots of money. And the metallurgy we know of this system is quite favorable. So do not discount 0.4 gram in this country. Let's go to the next slide. We'll just touch on a couple of images. First of all, this cross-section shows that deep hole. It shows where the position is of this 400-meter interval of 0.4 gram. And it's below some other shallower holes that they drilled over the past few years. So we know the mineralization projects all the way to surface. Could it, what happens in and out of the section, or what happens, a bit further? Like, think about it. If this is 0.4 gram and the one above it is 213 meters, 0.8 gram, what if they drilled 400-meter intercept to 0.8 gram? Like, in other words, imagine a drill hole right there. Wow, now we're talking. Okay, this is neurology. Think like that. Okay, don't think, it's 0.4 gram. There's something more going on here, and these guys, quite frankly, have just started to kind of figured it out. All right, so I think they're drilling some more deep holes here, and I'm really anxious to see what happens, in the near environment to this hole, because you could define tens, maybe even a few 100 million tons in a system like this very quickly. Look at Snowline. Look at the enormous size of Valley and how that unfolded. What's 200 million tons of 0.4 or 0.5 gram worth? Well, that's even, that's pretty darn good inventory of gold. So don't discount it. Okay, but this gets even more exciting with the next slide. Let's go to the next one. So they drilled. Oh yeah, this image actually shows. Sorry. This is Maria Bonita, and one of the things that really stands out here is that this little white dashed line they have that's over the top of the magnetics is showing us their interpretation of the porphyry blob that hosts this mineralization. And you can see all the white boxes; those are drill holes. But then the one they just announced is at MBA 32. Okay, so that's kind of down there in the lower right. But notice over there, a little ways to the east, within the envelope of the porphyry blob, they have MBA 33 in progress. Again, it's a deep hole. Let's see what they hit there, guys. I mean, this is quite exciting. Let's not discount anything. So more news to come. Let's go to the next slide. There we go. Okay, now the map in the upper left shows all of the discrete gold targets as defined by soils across the Cajueiro project. That central mineralized area, the resources they have, is right there in the middle of that white box where it says Cajueiro Central. That is where that resource is. Now they have the trial mining permits, which is really interesting. Notice Maria Bonita is up there in the upper left, but then you have two targets that are kind of in blue or light bluish gray. There's Traveras Norte and Moro Verde. Okay. Then if we go over here to the right, you can see a zoom in of those. And guess what? They have the same kind of porphyry present at those two targets as they do over at Maria Bonita. Quite frankly, we're seeing the same kind of porphyry in all of these things. Okay, and the first drill hole they've put into Tavares Norte hit this kind of core, right? What does that look like? Well, it looks just like the stuff they hit at Maria Bonita. Okay, so you can start to see, a picture where the upside down cow is starting to take shape, right? We got different apophyses of this intrusive porphyry intrusive coming up, and quite frankly, you could have a whole cluster of these things, and that's how you get really, really big gold districts, guys. That's where you get large tonnages and large endowments. Okay, so I'm really excited about Altamira. It's in exploration stage, and I just love to see results like this. Go to the next slide. Okay, Eloro. They did raise money a few weeks ago, and they're back in the saddle. They get the drills going. They're doing that infill drilling, and lo and behold, this is more towards the east of the targeted infill area. They hit a whopper hole. They got 456 meters, grading 1.72% zinc. Everybody says, zinc. What is that? They don't mention silver, by the way, but there is silver in these. I mean, if you look down there at the list of metals, and then below, there's silver in this interval as well. But this is a whopper zinc intercept. Okay, and zinc, by the way, is $1.50 this week, which is really interesting. But guess what? From my perspective, with my San Cristobal hat on, these are grades that we see. Is Eloro onto a big system, kind of a San Cristobal type system? This is the kind of result I would expect to see from the drilling we do. So yeah, this is a fantastic result. And quite frankly, these infill holes, once they get them all together and once they get all this drilled, I think will greatly, vastly improve their overall resource and really the mine plan that they ultimately develop. All right, so good news out of Eloro. Go to the next slide. Okay, Goliath. They haven't put assays out here in the past 2 or 3 weeks, but they did put out their news release. I think it was late September, maybe it was early October. I can't remember. And the date's not on here. I don't see it. No date. Okay. Anyway, they announced that they completed 64,000 meters. That's absolutely crazy. They were targeting, I think, 60,000 meters, and they blew past it. They got to 64,000 meters, and you can see there some of the stats. They have assays pending for 88 holes drilled in 2025. There's going to be a lot of news. So I'm very optimistic about what we should expect from Goliath over the next few months. Over here on the right-hand side, you can see the image. This was in the news release. It's basically just looking straight down like a plan view of all the drill holes. And anything in red there are intervals where they've seen visible gold, including the holes that have yet to come back from the lab. Okay, so should we expect some more nice intervals, assays? Yeah, I think so. Okay, so they're basically saying, hey, did a great job drilling. We exceeded our target. Hey, we've got a lot of news coming over the next few months. So good on them. Let's go to the next slide. By the way, Goliath did raise, what did they do? They did some sort of flow-through deal, and I think they raised money at a premium, which is awesome because it basically gives them that momentum to carry on from season to season. I love seeing that, by the way. It's fantastic. Okay, Eskay. Look, I'm a director, full disclosure. Got to put my hat on here. All right, so Eskay, we did a program this summer. We borrowed some of Kenny Conkin's geologists to come up and prospect in that southern area where we found the Bleg sampling we did a few years ago, found a very broad area of strongly anomalous gold in stream sediments. And these guys did a great job. They collected quite a few samples. Most of them are spot rock chips. Some of them are sod channels. But you can see some bonanza grades that they were able to collect, both gold, and there's also quite a bit of copper in most of these. All right, now this is interesting. What is this? We don't know that if it's related to a porphyry, meaning something like, say, Kerr sulfurettes, which is nearby, or it's certainly not VMS. Okay, we've ruled that out. These are not VMS related. But there is an Eocene. What is this, an Eocene? Well, it's an age of intrusive that's nearby, and it happens to be the same age as the intrusion at Goliath. Okay, so these Eocene intrusions, which are kind of subtle and they are just quietly sitting and scattered around the Golden Triangle, some of them have really interesting gold mineralization, and we're starting to see that kind of picture here at Eskay. Okay, do we have a target yet? Not quite sure, but this summer's work, once we get all the assays back here in a few weeks, this summer's work should tell us if we're starting to see a center of gravity form. And I'm going to give you a little preview of that with the next slide. Go to the next image. Okay, so on the left here, the little polygons of color are basically our Bleg catchments, or think of it as the stream sediment sample and the area that's being influenced by that sample. In other words, where it's pink in that catchment, you got high grade gold. Okay, so something's deriving the gold in that big swath through there in the northern part of that image, and you can see the area. See all the little polka dots that we have there. Those are samples that these guys collected over the summer. So they only tested a little tiny part of this. There's probably a lot more room, like whatever these veins are, probably extend off up into the other catchments up there. But they did at least proof of concept. They showed that there's a point source or point sources for gold mineralization that's explaining the gold in these catchments. And then if you come over here to the right and you look at the image there, you go, that's really interesting. Yes, there is a glacier right there. And, this is a snowfield that kind of melts back in the summer, and then, it fills up with snow and it melts back. But overall, it's starting to shrink and it's starting to go away. Okay, but as that snow field disappears over time, it's exposing these areas of where these guys have found these high grades. This is kind of remarkable. I mean, I've done a lot of prospecting in my career. And to be able to go out and take, literally dozens of high grade samples in the course of prospecting activities like this is pretty unusual. It usually means you're onto something. Okay, so onto something. Do we know what it is yet? Not quite. These veins tend to be flat, kind of like sherbet. Similar. Okay, is there an ore body here? Don't know. We got to do more work. Do we have a drill target? We're starting to see some data that points to that. Maybe we could drill some holes and hit a stack, like think baklava type high grade veins. All right, more work needed. Yeah, we do have a bunch of assays coming back, so stay tuned for more news. Let's go to the next slide. Okay, in the same vein, Juggernaut is targeting this is yet again an Eocene intrusion, but this is up in the northern part of the Golden Triangle. In fact, I think it's almost kind of just out of the northern part of the Golden Triangle, if I remember right. But they found, as the ice melts back, they found this area, this big one target, where they've basically found a huge amount of relatively flat veins, some thick, like 2, 3, 4 meters up to 6 meters thick, say. And many of them, it's not just like one vein or something. They're finding multiple veins in a broad distribution across this property. Do we have assays for all these veins yet? No, but I think the company is going to get assays, like a lot of assays over the next few months. It reminds me of that first year that Goliath did all that work, and they had the vertical or the sawn channel samples and stuff like that. I think we're going to see similar news, we'll say, to the original news that we saw out of Goliath in 2020, 2021, in that period, something like that. The data we do have back from here suggests gold, silver, pretty high grade, okay? And it shows the same kind of polymetallic flavor with these veins. So very, very much like Goliath. This could be the Goliath number 2 in the Golden Triangle. Let's go to the next slide. Okay, one of the stories that I got to say is, I think, really underappreciated is Kingfisher. Now, Kingfisher had a project a couple of years ago, the Cloud Break project, and that one did not turn out as well as hoped. But like a lot of companies, they pivoted, and Dustin's done a great job consolidating a very large land position in the northern Golden Triangle in an area where there's a lot of porphyry targets kicking around. And one of the targets they tested this year is this Hank Gold Silver, or Hank Williams Gold Silver area. Now, look, there's kind of a couple things going here, but basically this system is the top part of a porphyry complex. Okay, so they're basically right at that critical level where they see epithermal mineralization over broad areas, but they're also chasing the porphyries that are likely driving these systems. And I think they did a great job this summer. Okay, so you can see all the data there in terms of soils and stuff, and the surface samples, beautiful continuity of mineralization, epithermal mineralization. And then you can see the geophysics they did. It shows very discrete targets, and then their interpretation of porphyries at depth. Guess what? They drilled a hole. And I think this hole over here on the right-hand side is, it's the hole number 9, is a Hank Williams HW9 hole. That's chalcopyrite in there, guys. Okay, do we have assays yet? No, but that looks really, really good. Do we know if the entire hole is mineralized like this? Don't know yet, but there's a lot of news coming. And why people aren't paying attention to this story, I don't know. But I'm going to kind of yell and scream and tell people they should read through recent news releases and get a better picture of what's going on at Kingfisher, because I think the work they did this summer is actually starting to see those porphyries that are driving the epithermal systems that are vast across this area. And more importantly, they've also done a very good work. They did a MT survey. In fact, I need to talk with Dustin. I think they're going to have the data processed here shortly. I want to see what those MT targets look like, because I think they could really, really drive exploration from here. So good job, good technical work. Lots of exciting news. This is one to keep an eye on. Go to the next slide. I gotta take a little water here. And tooth hurt, starting to kick in. I think I need more Advil. I left it at home, darn it. Okay, one of the stories we got to pay attention to now is Mogotes, because they are ready to drill. In fact, they announced they're going to commence drilling here shortly. Bear in mind this is southern hemisphere, so it is now. Let's see, this is late October. So this is like late April in the northern hemisphere. So it's spring. It is mountainous terrain. Can they just whip up there and start drilling? Not quite, but let's hope they can get in there soon, maybe in a few weeks. And they're going to drill. They got plenty of money to drill. They got their targets defined very well. I did talk with Steve Nano a couple of days ago. He's their technical guy. Very excited about the program that's coming up. What you're seeing on the left-hand side here, that's the Filo deposit. Okay, that's BHP and Lundin. Filo de Sol is an absolutely massive world-class porphyry. It's defined by the green. Is it open to the south? Yes, it is. Okay, and it probably comes down onto these guys' ground. And that's why we are investing in these guys. We think that the red blobs that you see there, it's basically a trail of similar porphyry targets to what they have at Filo de Sol. Bear in mind, there's other targets further to the north. There's a couple other companies that are on this trend too, and they're hitting major porphyry. So guess what? We have a great season ahead of us where they're going to start testing these. And this Los Mogotes target, which is the kind of teardrop shaped one immediately south of Filo de Sol, is their first target. You can see it over here on the right-hand side. That's a long section. On the right-hand side, you see, BHP and Lundin's Filo del Sol deposit with all the drill holes. That's the projected pit they're going to have. But then if you follow that along and then you cross the border into the Mogotes ground, you can see that bright purple thingy there that looks like a little squid or whale or something underneath the surface. That's their geophysical target they're going to be testing here soon. Okay, and this is exciting because it's basically the same horizon or level as Filo de Sol. Okay, so could we find another one? Heck yeah. There might be a target there that generates a porphyry much like its neighbor. Okay, so stay tuned. This is exciting, seeing them drill. Let's go.
Closeology.
Closeology. Absolutely. Closeology. All right, let's go to the next slide. There we go. Okay, Newfound is kind of back in the saddle here. Like, they picked up the mill, which I think is brilliant. Took them a little while to get there, but, they got the, whatever it's called, Maritime Mill or whatever it was called. And I think that's a great step. They got a mine development team in place now, but, they're doing a lot of the work that they need to do, the infill drilling and stuff that they're going to need to do to get this deposit ready for mining. And part of that was stripping back like they're an iceberg. They stripped back and excavated the thing and blew, used pressurized water to clean the outcrops off, and then they did channel sampling, and they came up with great numbers. I mean, look at some of these results: 64.8 gram over 6.7 meters, and 23.9 gram over 15 meters, et cetera, et cetera. Look at all the numbers there, great numbers. And then over here at Dome, which is another target, I think this is up further north. They hit some nice intervals there. Not quite as long, but you can see 10.4 gram per ton over 20.5 meters, 7.5 gram over 13.4. These are great numbers. Okay. This work is going to be ongoing to infill and actually, prepare for mining, but the high grades are continuing here. And I think you have a story that's now shifted full year into the development stage. So basically I consider this a right-hand story at this point. And that's where I think the value is going to get created as it goes towards becoming a mine. Let's go to the next slide. Okay, Core Silver. They changed their name. Okay, Core Assets changed their name. Focus on silver. That said, they are also looking at copper. Okay, these are 3 news releases that they've released very recently. So they generated a lot of news or information this summer. Do they have assays for all of these things? No, they don't. But at La Verdière, I believe they call it, they have found an extensive area of mineralization. They've expanded the footprint of it at surface. They got some drilling done here as well. And, they think they have a sizable porphyry discovery. Porphyry copper primarily, but there's other metals, silver and other metals there too. And then way up the hill, back towards Jackie at the blue area, you got, sulfide CRD mineralization. So replacement style silver, lead, zinc mineralization in replacement deposits around what is probably another porphyry in that area. And they're chasing both of them here. So we should see a lot of news come out of these guys over the next few weeks. Let's hope they hit some good stuff. They're pretty excited by the bullets you see, and I can't read through them all. Quite frankly, they're too darn small. Let's go to the next slide. I just realized it's almost 2 o'clock, and I have a secret surprise for everybody right at the end, and I don't want to blow it. Okay, Electrum. Electrum has pivoted. Okay, they tried testing Timok East, didn't quite hit much. They did some more surface work, interesting results, but they've decided to refocus on this Novo Tolmino, I believe it is, which is a gold target. And they do have a resource there, 7.1 million tons, 2.5 gram inferred already. Okay, this is a gold target. Pivoting to this, I think, is a good move. They called me a couple months ago and said, hey, should we pivot? I said, absolutely. Let's get going here. This is the market to do it. They've raised some money, and I think they're going to go out and drill shortly. Let's go to the next slide. Yukon Metals, early stage on all their projects, but they did see some really encouraging results from the Birch property. This is a high-grade copper skarn. I would say it probably has potential for copper and also silver, maybe even a little bit of gold, don't know. But they did see extensive skarn mineralization in the drilling. Do we have all the assays, all the data back yet? No, but it seems to be an interesting new discovery. I'll wait until I can see all the data before I say much more, but it does look interesting. Let's go to the next slide. Sorry, I'm trying to put my skates on here. Okay, Trifecta. Look, this is a reduced intrusive story in the Yukon. It's off to the east there. This rye property that the lower image comes from is, in my book, my favorite project that they have, okay, because it's a reduced intrusive and they see sheeted veins. And they did enough drilling this summer to say, hey, we do see sheeted veining in some of the drill holes. And in particular, it's in the holes that are actually a bit further from the actual mapped intrusives. These are holes that are out in the country rock, the schistose rocks that are next door. Does that mean it's not quite a reduced intrusive story? No, actually, Banyan, for example, is entirely in schistose rocks. So you can't discount this, but they do see the sheeted veins, and they do see some of the bismuth sulfur salts and stuff like this. Not a mention of EG yet, but they do have a lot of numbers. Look at all the values they have at surface that do hit visible gold, or I should say hit assayable gold, significant numbers. Now, I talked to Richard after they got done and they put this news release out, and I saw it. I said, Richard, what's the anticipated timing for getting assays out? He said, look, it's going to be a few weeks because the labs are so backed up. I think it was like 2 weeks ago when they actually got the core to the sawing facility. So, this could be late November, I don't know, December or something. So people got to be a little bit patient. I think the story lost a lot of its oomph because they don't have that immediate news, but maybe it's like Snowline where, that sometime late this year, early next year, they start to release a few holes that hit 100, 200 meter long intervals of decent gold. And all of a sudden we have a new reduced intrusive story to talk about. I'm still quite excited. I'm just sitting tight, waiting for news. Let's go to the next slide. Okay, Silver 47. They talked about drilling up at Red Mountain. They also talked about drilling in Nevada. I'm going to focus on Red Mountain because that's the target. These are the targets I really, really am passionate about. These are the VMS targets up in Alaska. Red Mountain's a very extensive project that has a lot of VMS targets. The two most prominent VMS targets are West Tundra Flat and Dry Creek. Okay, and the two images on the right show the basically cross-sectional views of the drilling that they've done and how these things are open. You can see some of the assays they hit. They've done quite a bit of drilling here, but they have a lot of assays coming back. I think there's assays for 8 additional holes that are still out. But look at the numbers they're hitting: 640 gram silver equivalent over 6.9 meters. You got 736 silver equivalent over 3 meters, 344 over 12.8 meters. Some pretty good numbers coming out of both West Tundra Flat and Dry Creek. And then you can see over here in the image on the right-hand side that these things are wide open for expansion in both cases. This is where I think you could see a VMS story, a pretty high silver VMS story emerge that maybe does have a big company kind of scale to it. So, good on them. Looks like a productive summer. Be interesting to see how they drill some of their other targets over the winter months, but let's wait and see what they hit out of these holes. Let's go to the next slide. Okay, this is my surprise right at the end here. Okay, got 9 minutes. Sorry about this, guys, but Kalo Gold. Okay, we invested in Kalo in late 2022, I believe it was. They had a bit of a false start. Okay, they got going. They had just enough money to be dangerous. They went out and they didn't collect all the basic data they needed. And in my view, they drilled extremely prematurely and they basically spent their treasury and they landed in a heap. Okay, I was be flat out, I was pretty darned irritated with them. But there's always this thing called redemption, and they came crawling back and said, hey, let's talk more about what we could do to bolster our technical data and get a better picture before we go drill again. They also built up their team more, their geologic team. And guess what? If you do that hard work, you can make discovery, and they have. Okay, so I'm happy to say that the hard work that they put into this and that redemption that we gave them by helping them get financing and kind of pushing them along has paid off. All right, so let's go to the next slide. That's where the activist stuff comes in, right? All right, so what are we looking at here? Look, this is a gold in Fiji story. It is on the Northeast Island. Okay, so you can see the Vatu Orum. I love the name. Vatu Gold project is on that Northeast Island. Why do I like to? Well, I'll tell you what. At Newmont, I had a good friend. This is his favorite epithermal / alkaline target in the world. Okay, and that's always stood out in my brain. So when we saw an opportunity, I told Kevin and Tavi, let's look at this pretty hard. Anyway, that Vatu Orum is what we're going to talk about today. Go to the next slide. I don't have much time, so I'm going to hustle. Okay, here's their land position. They got a very good land position. That's one of the criteria I have. The company has to have a comprehensive land position over the entirety of the target. I don't like companies that have piecemeal land and stuff. These guys have 367 square kilometers, which is great. That's a district scale land position. It's in this Nubu graben, which is basically a structural graben where the crust is pulled apart a bit, but that allows hot fluids and hot magmas and stuff to come up and form a system like this. Okay, let's now, before we move on, sorry, there's different targets types that are shown here. Colors, I can't get into the weeds right now, but basically epithermal, like think hot springs, is purple. Okay, diatreme, what is that? Well, those are vents, like volcanic vents that have erupted. They also can host mineralization. There's some of those here, okay? And then there's other types. But I'm going to jump forward here. Let's go to the next slide. I want to try to knock this out before 2 o'clock. So this Aurum Prime, the two mineralizing styles, you have both the epithermal targets here, which are the purple blobs, and the diatreme. So we've zoomed way in, and we're looking at this Aurum Prime. The diatremes are really fascinating. Now, one of the things I talked to these guys about doing was CSAMT, and they did do that. Okay, thank God. All right, because that helped them target this sucker, and they were able to swing the drill around and actually hit their targets. They had defined targets, and they were able to hit. Thank God. All right. Yes, they collected other data. They got surface sampling and stuff, and rock chip sampling, mapping and stuff that showed very strong, very nice geochemical anomalism at surface. But man, finding those diatremes, those little green circular things, very important here. And they targeted one. Okay, go to the next slide. And you can see that box shows the first hole, QC1 or whatever it is. It's VA25 DH11, but it's QC1. It's basically the first target hole in this target, 22.12 meters at 12.8 gram per ton gold. Oh my gosh, that's fantastic. I mean, how often do you hit that? And especially in a greenfield target. This is a brand new greenfield discovery, guys. And inside of that, yeah, there is some high grade. There's 7 meters of, there we go, 7 meters of 35 gram, and then 1 meter inside of that of 83 grams. So, there's bonanza grade in here. And that's exactly what we like to see in a system like this. They only drilled 11 holes, so 2,436 meters. Your odds of hitting something are slightly better than if you'd never been born at all, but these guys did it, okay? And they did it with good data, good science. Thank goodness. And now they have a discovery they can follow up on. All right, let's go to the next slide. All right, what is this thing? Well, a diatreme, like I said, is a volcanic vent that comes up, usually when the hot magma hits groundwaters, which are, sitting there minding their own business. The magma triggers very rapid expansion of the groundwater, and it basically blows a hole in the ground like a bullet coming up through the crust. You can see a diatreme eruption actually in New Zealand over here on the right. Okay, so that diatreme, once that hole is opened up, fluids can then come up that hole and they can mineralize the diatreme itself, and that's what these guys targeted. Okay, so they targeted for ore bodies in the margin, the wall of the diatreme. Let's go to the next slide. This is some of the core they got. Okay, this runs 18 grams here, but this is out of that interval. And you can see the breccia, the rock fragments, it's all broken up. And then beautiful silica running through there. I mean, this is just beautiful epithermal quartz, like true low sulfidation stuff. But I think as you go downward, you'll see this morph into what we call more of a classic alkaline system. This is just the top of an alkaline system. I think this is wonderful. Okay, this thing looks like a bona fide discovery. Go to the next slide. Okay, now here's where it gets really important. Now, they didn't show all of the sections of CSAMT. Instead, what they did is they distilled this down to their interpretation of the CSAMT data and the targets they have. So the gray things are basically structures that they think they can see in the CSAMT. And then those blobs are basically resistive zones where they think hot fluids came in and silicified the rock and made it resistive. And they have multiple targets. Now that's wonderful because now you can start poking holes at each one of those things. Some are going to hit, some are not, but at least you have holes or targets you can test. And lo and behold, the QC1 diatreme, which is the one that the arrow's pointing to, that hit like the first test in that hole or that diatreme, bam, they hit it. At this scale, those things look small. They're not small. Okay, that's 500-meter bar down there in the lower right. So these are big targets, and they're scattered across the property. I think these guys have a good future ahead of them. All right, I think that might be the last slide. Let's go. Yeah, that's it. Okay, so all yours.
All right, Quinton, thank you. Well, good stuff. It's really exciting to see what's going on at Kalo or Kalo. someone said it's pronounced Kalo, and I have no idea how to pronounce it.
Bugger. Oh well, you can blame me. Whatever.
Wow, I wasn't aware of that.
No one either.
But it's really some great redemption, and wow, I mean, it's amazing when you're gone for 3 weeks. You know how much I even miss, because I know some of that news came by pretty quickly, and I didn't even realize how many new discoveries we have in our portfolio. I knew we had a few more, but this is really great. So, Tavi, any final comments as we wrap up here?
No final comments. I kept my presentation longer than usual. I'm just excited about the market overall and like to see confirmation of a thesis developing in our favor. And so, yeah, this is my final comment. Go on, Kevin.
All right. Well, yeah, many of you many of you are already invested with us, and that is awesome. We have a great client base and very loyal client base of long-term focused clients, and we're really appreciative of that. And there's a lot of folks who have kind of been watching on the sidelines too, and I know most of this crowd is already pretty gold oriented and mining friendly, but I know there's a lot of other folks out there that are kind of new to Crescat and watching us and have been watching us from the sidelines. I really wanted to reiterate that I think this pullback in the metals market is an opportunity, and it's Tavi was mentioning Roni Sturflia. He put out a chart on Twitter I saw this morning talking about your typical pullbacks in the GDX, I think it was, or maybe the Philadelphia Gold and Silver Index, and we've basically had a typical pullback, in terms of the whether it's been 15% or whatever it's been, not a and by the way, our funds are not down as much as the GDX or the Philadelphia in this pullback. We've been actually outperforming, which is exciting to see that the smaller cap exploration names that were involved are actually outperforming. But anyway, take advantage of this opportunity if you've been sitting on the sidelines to reach out, learn more about our funds. Reach out to Merrick. His information is here, and we'll catch up with you again in a couple of weeks.